Good afternoon, everyone. Thank you so much for joining our final voluntary benefits webinar for this open enrollment. With me, I have Rob Fulton from the orientation company who's supporting Workterra, our benefits administrator for voluntary benefits. He will be online to answer all of your questions. The presentation is actually pre-recorded to allow Rob and myself to answer your questions in the Q&A. So we hope we're really excited to help you answer your questions. If you go to the menu bar, either at the top or the bottom, there should be a little Q&A icon, and that's where we'll be to answer your questions. And with that, I'm going to get started on the presentation.
Welcome to the San Francisco Health Service System Open Enrollment Webinar. We're so glad you've joined us today to learn about your benefits for Plan Year 2026. Open enrollment is a period each year when all members can enroll in benefits coverage and change their current benefits coverage for the upcoming calendar year. You can change from one plan to another, enroll or waive coverage, add remove dependents from coverage, enroll in flexible spending accounts. If you do nothing, your current year benefit elections will roll over to the next plan year. However, flexible spending accounts do not roll over. Eligible members must re-enroll in the flexible spending accounts each year to participate. Your new benefit choices are effective January 1st, 2026. Open enrollment starts at 8 a.m. on Wednesday, October 1st, 2025, and ends at 5 p.m. on Friday, October 25th, 2025. You may enroll online through SF MyHub, located at sfhss.org. How to enroll. Find the open enrollment tile to access the My Health benefits to make your new benefit elections. City and county employees can also access SF MyHub through the SF My portal. Paper applications must be postmarked by October 24th, 2025 to be accepted. You'll be on mute and off camera for the entire presentation. We encourage you to ask questions. We will be using the Q&A function in Microsoft Teams. Scroll through your screen to find the menu bar, either at the top or bottom of the screen, depending on whether you're using your computer or mobile device. Click on the Q&A icon in your menu bar. Click on Create Post to type your question. We will answer as many questions as time allows during the Q&A session. Please do not share personal medical information in the chat. Everyone can see it. We recommend a one-on-one consultation. If you have questions that do include personal and private medical information, please schedule a private one-on-one consultation with a health plan vendor. Our health plan vendors have open enrollment office hours. To schedule an appointment, visit sfhss.org/OE2026. If you have eligibility questions, please call SFHSS Member Services at 628-652-4700 or visit our offices at 1145 Market Street, the third floor, during our business hours listed on the screen for further assistance. And we want to remind everyone to get their annual flu shot and COVID booster to protect yourself and your loved ones this fall and winter. With that, our presentation will now begin.
Welcome to the 2026 Voluntary Benefit Overview or webinar. You might be watching this live, and if so, during this presentation, the chat feature will be available for you if you have questions. As you know, the San Francisco Health Service System offers voluntary benefits through Workterra. They supplement or complement, if you will, the benefits that are provided for you and paid for you from the San Francisco Health Service System. These are benefits and programs that you can enroll in yourself and pay for yourself to supplement or complement the wonderful benefit package that you have. And we're going to go through and describe them. This year, there are only a couple of changes, and these benefits will take place January 1st, 2026, and begin payroll deductions during the month of January. So let's do an overview of what some of these benefits are. As I mentioned, you'll be able to use the chat feature if you have a question as we go through it. There will also be contact information that we will look at as we go through the slides where you can actually schedule an appointment and walk through them again or ask specific personal questions, or a toll-free number you can call Of course, these benefits and this information is always available on the San Francisco Health Service System portal or website, and there's a voluntary benefits section. You may see that. You may see a Workterra tile. You can click on that and go in and find all of this information there. So again, just to review, this is 2026. So these benefits you're enrolling in will take effect January 1st, 2026 and be enforced for the following year. Most of these can be changed throughout the year because they are in after-tax benefits. We'll talk a little bit more about that. But they would become effective in January of 2026, this January. And you can go to the website shown there, sfhss.org/voluntary benefits, and get information. You can also schedule a personal education enrollment session where you can ask questions to one of the Workterra team members. And you can also schedule that session or call with your questions, scan that QR code that will take you to the scheduling site, and you can schedule a time that fits your schedule and just spend some time going through the information. Open enrollment lasts during the month of October, and so you have plenty of time if you're watching this at the beginning of October, but don't delay, get this information, very, very valuable benefits, and as I mentioned in the beginning, you can access this information also through the sfgov.org My Apps system, and there is a Workterra tile there you can utilize. The voluntary benefits are pretty much the same from last year with the carrier change, which we'll discuss. But these benefits complement or supplement the benefits that you are provided as an employee through the San Francisco Health Service System. So they're benefits that you pay for, that you select. They're strictly optional. They do have discounted group premium rates. So they are put together with approval from the city and county or the organization that you work with that's part of SFHSS. And so they're reviewed to make sure that they're competitive, that they're appropriate, that they complement the benefits that you have. And so most of them are guarantee issue, which means you don't have to qualify medically for them. And most of the plans are paid for with post-tax payroll deductions, meaning that you're paying the cost of these on an after-tax basis. So there's no tax consequence to receiving the benefits. And most of the plans are portable. So should you terminate your employment, retire, etc., you would be able to take most of these benefits with you and enjoy them after you have left employment. The first benefit we want to talk about, perhaps one of the simplest, is supplemental group term life. And this is from New York Life. And New York Life is a change. The coverage was previously with the Hartford. It has been changed to New York Life. The benefits are very similar. It's just a different insurance carrier that's backing up the benefits should you have a claim. And so guarantee issue is available during this open enrollment. That's very important. And it is important that if you've had supplemental group term life with the Hartford, that you review your existing coverage and rates and make sure that on January 1st, when this switch is made, that you know exactly how much coverage you have and the rates that you're paying. Now, supplemental group term life is in addition to your basic group term life that's paid for and provided by the organization that you work for, the union or the city and county where you work. Typically, although you should always review, 1 times your salary is the benefit that is provided depending upon your group. You can add more term coverage to that benefit and pay for that on your own for you and your family members. And that is life insurance that is paid for directly by yourself. It's paid to your beneficiary should you pass away in a lump sum. The premiums are based on your current age, and as you get older, that rate goes up, just like with any type of term life insurance. It's available, as I mentioned, for you and your eligible dependents. And if you have any questions about that, upon looking in the enrollment system to see if it's something you'd like to participate in, check the rates, certainly go in the voluntary benefits section, or as I mentioned before, call and schedule an appointment and review it with one of the benefit advocates that are available to help you with that. And I will have that information again before we close our webinar. This year, one new twist, so to speak, is that traditionally, when you have enrolled or you've had supplemental term life insurance, it's included an accidental death and dismemberment policy or amount of coverage, but it's been part of the supplemental term life. So if you enrolled in supplemental term life, you also had accidental death coverage. Well, New York Life has offered to break that out so that if someone is really only concerned about an accidental death, it is significantly cheaper, and you could buy that without the supplemental term life. And of course, it's accidental death coverage, so that if you died of a sickness or natural causes, it wouldn't take effect, it wouldn't pay a benefit, but it is cheaper because of that. And some people might only be interested in accidental death and dismemberment. So it's unbundled, you can buy either or both and include your family members. It's not dependent on enrolling in one to have the other. If you have any questions about how that works, once again, call, schedule an appointment, and we'll walk you through how that works. It's a nice benefit because some people are really only concerned about an accidental death. You have to enroll during open enrollment, and it is a guarantee issue on all the coverage. And again, accident occurs, has to be fatal, or there is a dismemberment. Part of that policy, for example, you lose an arm or a leg or something like that, it has a benefit as well, all due to an accident. Once again, available for you and your dependents. You don't have to enroll in a supplemental term life. You can enroll in just accidental death if that's what you chose to. Once again, you're going to see that website right there for voluntary benefits continually, because that's where you can go to get more information, as well as getting the rates so that you know exactly how much the coverage is. The next benefit that we have some changes to is the short-term disability plan. It has been previously provided by Manhattan Life, and it's also changing to New York Life, as is the supplemental term. So the guarantee issue coverage is going to be available because of this change during this open enrollment, meaning no health questions, no qualifications. So that's nice if you're a new member to the plan. You don't have to medically qualify. You do need to double check your coverage that will renew if you're a current Manhattan Life certificate holder, because the rates have changed a little bit, and you'll just want to make sure you understand the amount of coverage you have and the change. If you have any questions, again, feel free to call the number or schedule an appointment. So short-term disability, it's still a great way to supplement your ability to have savings or to get through a short-term disability. Certainly the state of California's SDI plan is a great benefit. This pays on top of that. It doesn't integrate with that. And that's why it's limited to just 30% of your earnings, because SDI typically is paying in the 55 to 60% range of your earnings. So this just really helps you replace almost all of your income if you were concerned about that on a short-term basis. The MEA plan has a 13-week period, so it goes right up to the 90-day elimination period on the LTD plan that you have. And then everyone else has a 26-week or a 6-month or 180-day benefit that again goes up to the LTD waiting period that you have for long-term disability. So this disability plan is going to fit very nicely if you want to make sure you have the maximum amount of earnings that you have covered in the event that you had a short-term disability. The pre-existing condition limitation improved with this plan. It was previously what is referred to as 1212. Now it's referred to as 312, meaning that for the first 3 months of the plan, you look back for the previous 12 months of any pre-existing condition. So that's a pretty significant enhancement. Again, make sure if you've had Manhattan Life that you go in and review your coverage. The rate structure has changed somewhat. And if you're new to the plan, it's guarantee issue during this open enrollment, which is great. Elimination period and benefit period depends on whether you're an MEA or not. And there's a pre-existing condition, but it only lasts for the first 3 months. So more information, you can go to the same website under voluntary benefits or call and schedule an appointment. Okay, moving on. The next benefit is called lifetime benefit term insurance. And term insurance is a little bit of a misnomer here, although it is technically a term policy. The great thing about this plan from Chubb is that the premium is level. It never goes up, as with most term insurance. So it's level for the entire period of time, but it is actually a term policy. It's not a policy that you're building cash value in. It's a policy that has a level premium and is designed to be available for you for your entire lifetime and be able to afford it because the premium never increases. It's guarantee issue also during this open enrollment, which is fantastic, up to $100,000 of coverage, and there's no questions asked if you're an actively work employee. The premiums are guaranteed. So as I mentioned, unlike term insurance, they're level for life. The premiums are guaranteed, unlike, let's say, a universal life insurance plan where rates can fluctuate based on interest rates and based on mortality experience. The insurance company reserves the right to do that. With this plan, it's a level premium for life. It's guaranteed. The rate cannot go up. And even though it's a level premium and has a guaranteed rate, it's actually more like a term insurance plan than a whole life plan that has guarantees and level premiums. Actually provides more death benefit. So you could consider this a hybrid life insurance plan, level premium like whole life, but no cash value, but guaranteed rates and cheaper rates, higher coverage like a term insurance policy. So the way the policy is structured up until age 70 or 25 years, whichever's longer, 100% of that death benefit is guaranteed. After that, when a lot of people consider their life insurance needs less, perhaps, or they don't need it, then it goes down and it's guaranteed at least 50%. So that helps with the cost and also lines up with what a lot of people reconsider after 25 years or at age 70 when they retire. So it's just a way to help the premiums be lower with a lesser guarantee. Now, it could very easily stay the same rate forever, as I mentioned. But important to know that what's guaranteed is at age 70 or 25 years for the rest of your life, it's guaranteed at 50%. Again, that's just a way to help the cost stay lower initially. There are paid up death benefits that begin to accrue after 10 years. So if you had it to retirement and you thought, gosh, I don't know if I really need this, I don't want to pay for this anymore, I'm retired, your option would be to keep it and have a lesser coverage for the rest of your life and not pay for it. So that's always an option. The last point, and this is probably the most popular feature of this benefit, and that is that it contains a long-term care supplement so that you can receive this benefit, this life insurance benefit, prior to your death if you qualify to needing some type of long-term care coverage or benefits. And we'll explain that some more. The way that works is it accelerates the death benefit, so to speak. So 4% of the death benefit would begin payable to you for 50 months, and that's 25 months, which that would be the whole death benefit, but it extends it another 25 months, so it actually doubles the coverage. And if you are receiving home health care, if you've gone into assisted living, receiving adult daycare, or nursing home, or simply you have triggered the failure of your ability to do 2 of the 6 activities of daily living, or you have some severe cognitive impairment, then that would trigger the benefit. Any of these things would trigger the benefit, and you would basically begin receiving your death benefit prior to your death when you know that you're having some medical issues, some health issues, but as you might know, the cost of long-term care, assisted living, home health care has skyrocketed. So a lot of people would look and say, I have $100,000 of life insurance, and it looks like, I have a greater potential to pass away because of these health issues, and now I need help. My family's going to be burdened with paying these huge expenses. Wouldn't it be nice to have my life insurance now? Well, that's exactly what this does. So it's a death benefit that you have that you can begin to draw down upon should you, again, can't do 2 out of 6 ADLs, you're in assisted living, etc., as I mentioned, and it's a really, really, really nice feature. The premiums also are waived while you're receiving the LTC benefit, so this is a great benefit. The lifetime benefit term has this acceleration for long-term care, and that's a very, very attractive feature to it. The next thing we want to talk about are some benefits available from MetLife. And there are two programs that MetLife makes available. The first is called critical illness. And critical illness is a lump sum benefit that's paid for over 40 covered conditions through MetLife. So, for example, the most common things: cancer, heart attack, stroke, coma. If that happens to you, you have wonderful medical insurance through the city and county, through SFHSS. You have great benefits. You have great coverage, medical coverage, hospitalization. The critical illness plan is designed to pay you directly a lump sum benefit to help with the indirect expenses that go with having a major illness. If you've had a loved one, a neighbor, a friend, a relative who's gotten cancer, had a heart attack, Alzheimer's, for example, you know that there are a lot of things that aren't just a bill from the hospital or a doctor's bill. A lot of things happen. Sometimes spouses or family members have to take time off work. Some people have to move. They have to change a schedule. There are specialists or places that perhaps aren't covered under health insurance where you need to get benefits or to get programs or procedures, whatever. There's a lot of indirect cost. I read a statistic one time that said that the majority of bankruptcies in the United States are medical related, and they're related to a major illness. And that's a real shame because we have such great benefits. We have incredible healthcare technology today. As a matter of fact, more people survive cancer than die from cancer today, and that's obviously to be applauded and celebrated. And yet, the cost of getting well, the cost of going through the process can be devastating for many, many people. So, critical illness is designed to pay you a lump sum benefit, 10,000, 20,000, 30,000, whatever you choose. So, you have cancer, you have a heart attack, you have major organ transplant, you have severe burns, you have kidney failure. There are a lot of different diseases and they're listed, and you are paid 100% of your benefit for the majority of those. And then there are some less significant illnesses, injuries that pay a reduced benefit or a percentage of that benefit. But for the major conditions, you're going to receive a lump sum benefit, 100% of whatever you select. And your spouse and your children, your domestic partner, they can also be included into this plan, and they get half the amount of coverage that you get. I'm sorry, 100% of the amount that you get. So if you enroll for 50,000, as an example, then they would be included for 50,000. I was thinking of some of the benefits that pay 50% or 10%, like the skin cancer. We'll look at some of those real quick here. But again, family members, 100% of the benefit that you choose, they can be included. Over 40 covered illnesses, benefits that are paid directly to you. Here are a few highlights. So as I mentioned, up to $50,000 of coverage. There's a health screening benefit in this plan. So if you get a health screening, a checkup, um, a test, whether it's maybe a mammogram here in California, that's actually covered at $200. But any kind of a test, any kind of a health screening, whether you pay for it or not is irrelevant. If you get the test, MetLife says, you know what, that's a good thing. That could help them avoid a major illness. So we're going to pay $100 regardless of whether it comes out of your pocket or not. So that's $100 just for taking any kind of a test, and that is paid directly to you. And so that can significantly offset the cost of the plan, and that is renewable every single year. And that also includes um, spouses, domestic partners, children as well. There's no benefit reduction with age under this plan, which is good. And you can receive up to 500% on different payouts of the benefit. And I know that's something you have to be the most unlucky person around to have more than one of these benefits, but it could happen. And if it does, it's good to know. A couple of the things that I like to point out um, that are covered under this plan is like Alzheimer's and Parkinson's, cystic fibrosis, ALS. If you're familiar with any of those things, a lot of the traditional plans, the early plans didn't pay for those benefits, and this plan does. So there's a full listing on the website. As I mentioned, over 40 conditions. Here's an example of a 25% benefit. So COVID-19, and this was brand new, obviously, a couple of years ago when we all lived through the COVID-19 nightmare. But it pays 25% coverage. So if you had a $50,000 plan, it would pay $12,500 if you had COVID. So there are a few of those things like that that are less significant, perhaps, than, let's say, cancer or a heart attack. And so they pay it a reduced benefit or a percentage of the full benefit. The health screening benefit, as I mentioned, routine wellness exam, colonoscopy, for example, COVID-19 tests, even dental and hearing exams, mammogram, as I mentioned, are eligible for this plan. And again, spouses, partners, children as well. And the mammogram benefit for females is $200. And so that's a separate benefit. It's a plan that the state mandates that if you're providing this health screening benefit, it's twice as much for a mammogram. And so it's a great benefit. It really helps with the cost, as I mentioned. So let's just use an example, break this down a little bit. So you have a choice of between $10,000 and $50,000 of coverage. And as I mentioned, you can actually, your total benefits could actually be as much as 5 times. You would hope that you would never have a heart attack, but you would really hope you wouldn't have a second one. But that is possible. You could also have cancer. There are times when people, they get older perhaps, or they just are unlucky and they have multiple health issues. So this plan is going to pay up to 5 times. And so again, not very likely, but boy, you would be very happy if you were unlucky enough to have multiple health issues that you had this up to 5 times benefit from MetLife. The second plan that MetLife makes available is accident insurance. And if you think of the critical illness as the plan that pays for one big major illness, you can think of accident insurance as the optional plan that pays for a whole bunch of smaller issues. Now, it does have accidental death benefit that's thousands of dollars, but what it has that's most common is hospital visits, doctor's visits, broken bones, concussions, benefits for ambulance, blood plasma, pain management, all sorts of stitches, cuts, bruises, all sorts of different, contusions, all sorts of different things that would happen. There is a schedule of benefits, so it's called a scheduled benefit plan. It's an indemnification plan, if you will, so that it indemnifies you or pays you for a specific accident, illness, event and it's based on a schedule. So we'll look at an example of how that works. So the covered conditions, we'll look at a bunch of those. It's going to pay from that. They're going to range from as little as $25 all the way up to $15,000, depending upon the severity. There's hospital coverage. You have a hospital, you actually programmed through the medical plan if you're enrolled in that through San Francisco Health Service System. But this is going to pay for an admission benefit, a daily benefit. It's going to help offset, again, perhaps some of those indirect costs that you experience if you have an accident. And then it's also going to have some accidental death benefits and lodging benefits, transportation benefits for loved ones that might have to come and attend to you. So again, most people consider this, they look at it as, broken fingers, children playing soccer, dislocate their knee, that type of thing. They go to the ER, they go to the urgent care. There's a bill for the x-ray, there's a bill for the ambulance, there's a bill for the doctor's visit, the follow-up visit, et cetera, et cetera, et cetera, et cetera. And all of those different things are included in a big schedule of benefits. And accident insurance is very inexpensive. And a lot of people consider this a very inexpensive way to supplement their medical plan. Should they be accident prone, they have children that are very active, etc. So let's look at an example. So we'll take Bill, and Bill has an accident at a baseball game over the weekend. And he has a broken femur and he actually has a concussion. So he must have tripped, ran into somebody in the outfield, and hit the deck pretty hard. Bottom line is, Bill hurts himself pretty bad playing softball. He's a weekend warrior, as they say. And he's taken to the hospital in an ambulance, and he's going to need some physical therapy afterwards. So $300 for the ambulance benefit. Just for going to the ER, $250. He had to have an MRI because he's kind of messed up, $150. He actually did get a mild concussion, $250. He broke his femur, ouch. That's a big break, that's a big bone, that's a major inconvenience, $8,000. That's one of the worst broken bones that you can have. And you can see all the other different things. He was admitted to the hospital. He did stay for, say, a night or two. And he's going to have to do some follow-up with his doctor, and he's going to have some physical therapy. So again, we're talking about maybe not a worst case scenario, but we're talking about a pretty bad situation. But just to illustrate all the ways that for accidents only, this plan can pay up to $10,000. And again, this is just someone has a pretty bad break in an accident and has to go to the hospital, goes to the ER in an ambulance. It adds up fast. So are most of his benefits, if he's under the medical plan, going to be covered? Yeah, most of them will be. He may have a deductible, depends on the plan that you're in, could have a deductible, could have some co-pays and co-insurance, but most of these things will be covered to a large degree. But Bill might miss work, his spouse, partner might have to take care of him, they might miss some work, he may have to use a different car for a while. You just never know. A lot of different things can happen. So this $10,000 is going to come in very handy for Bill in this example. Okay, let's move on. Identity protection from Allstate. This is a plan that you enroll in, and you're part of a club, so to speak, part of a Allstate plan member. You're a member of Allstate Identity Protection, where they are monitoring your identity to see if you would be a victim of identity theft. So they're going to be monitoring that. And when you join this, there's two different plans that are available, the Pro and the Pro Plus. But let's talk a little bit about identity theft. Well, what is identity theft? Someone goes to the bank and tries to open a checking account in your name. Or, very common, they try to open a credit card in your name because somehow they've gotten your information. Or they go in and they give your information for medical care. Or someone gets arrested and they say your name or who you are. Or they try to use your social security number for some type of government benefit. or maybe they even file taxes, try to get money back from the government, or actually literally create a new identity with your information by combining it perhaps with someone else. What identity theft is not is fraudulent credit card transactions. Your credit card company and your bank is typically all over that, and they do a pretty good job. Public information that's online, there's not a whole lot you can do about that. Um, your personal accounts being sent to collections, well, there's not much we can do about that either. Scams, hacks, that type of thing, that's not identity theft, but identity theft is on the left-hand side when someone tries to use your identity and open an account or get access to your information. So what identity theft protection does is it tries to help you in several ways. Number one, it monitors. So it's monitoring credit information, credit bureaus, etc., and providing alerts if they feel like someone is trying to track your credit and all of a sudden they see a blip and or they're looking at you and they're trying to steal your identity, so they're applying for something that a credit bureau would see. They're going to monitor that, so if something looks suspicious they'll be able to alert you. They also are going to provide protection should your identity be stolen and there's financial repercussions to that act. They're going to help restore your credit. They're going to provide insurance coverage for identity theft expense reimbursement, 401k, HSA fraud reimbursement, those types of things. So they're monitoring, they're going to notify you, they're going to provide some insurance for reimbursement and basically protect you in that way. The Pro Plus coverage, which is the kind of the upgrade, is going to add some privacy and data monitoring, some travel expense reimbursement, and some additional multiple credit agencies and some additional benefits. So these are two programs. One's just a little bit more money a month, and you can look at these and see which you feel like is of most interest to you. It's important to protect your family's future financially, and so that's really what this is designed to do. This coverage is broad in that it can include your loved ones at all, and they offer a pretty broad definition of family. They like to say under one roof, under your wallet. That's kind of their guidelines. So they're dependents who you're either housing, so to speak, they're living with you or you're providing financial security. It could be parents, in-laws, grandparents, etc. So regardless of where they live or where they receive their financial support, that's very important. If you're providing for them, they would be considered part of your family. So that's a great benefit that Allstate uses when they define what does family mean. It's broad and that's excellent. Okay, one of our favorite benefits, and that is for our pet friends, pet insurance. And Pets Best is the company that provides this coverage for SFHSS. And Pets Best Health Insurance has been available for a while. It's a program that, as you can guess, it's going to provide some health insurance for your pet. And there are a number of options that they make available to you. So you can choose an accident only plan or the accident and illness plan. So kind of like the plans that we discussed, like critical illness versus accident insurance, the accident plan is going to only be for accidents that your pet may incur. But illness coverage is going to be more broad. It's going to cover expenses for the vet or the emergency vet or something that were happened, whether it was an accident or whether they just got really sick. So there's different programs available under the accident and illness plan. The accident is the base plan, and then you can also add to either of those two plans routine care, which is kind of like wellness for us, going to the doctor, getting monitoring our vital signs and taking a health check, taking our blood pressure and all the things that you do when you get a health check, things to monitor and to keep track of and to see how healthy you are. You can also add that for your pet. It's an option. It's a 24-hour, 7 days a week helpline you can call. There's no networks. You can go anywhere you want to. This plan is discounted because you're an employee of SFHSS and you're covered there. Claims are easy, and it's a pretty comprehensive plan. So I'll tell you a little bit more about it, and if you're interested, we'll talk about how you who you call and what you do. So as I mentioned, really with this plan, unlike the insurance plans where you're going to go into Workterra, you're going to see the rate for you and the benefit and enroll. This plan, you're going to actually go directly to Pets Best and get a quote, and that quote is going to be based on three things: the pet type and the breed. In other words, I have a dog and it is a golden retriever. So the type and breed of your pet, the age of your pet, and then your zip code. Where do you live? And then they have a smart pricing algorithm that will kind of recommend the plan. But again, you have the ability to pick which plan. You can also customize, and it gets really flexible here because you can pick the accident and illness plan, but you can pick your annual limit, your deductible, or your reimbursement percentage. As you may know, with certain types of health insurance and medical insurance, there's a limit. There might be limits. Now, most plans today are unlimited. There's also a deductible where you're responsible for the first X amount of coverage or expenses. So you get to pick those things. And then there's a reimbursement. Are you reimbursed for 70% after the deductible, 80%, 90%? So you can kind of dial in your plan. And obviously, the higher the limit, the lower the deductible, the higher the reimbursement, the higher the cost. So you choose a plan, accident and illness. There's three plans: Essential, Plus, and Elite plan. And as you can see, there's a lot of options on this plan, and that's a good thing. It can look a little bit daunting, but when you contact Pets Best, they can kind of walk you through not only the financial options like the deductibles, the annual limits, but also, do you feel like you need rehab, chiropractic, acupuncture? Maybe not. So you probably don't want the elite plan. Office visits, exam fees, well, heck yeah. So you would want the plus plan. But it just depends. You can walk through them. It's a great organization, and we love our pets, and so it's good to have coverage. The claims process is very simple. You get the treatment, you pay, and then you file a claim and you get reimbursed. So again, go to any veterinarian, any clinic you want to, you pay for the treatment, you handle it yourself, but then you get reimbursed based on the plan that you have by submitting a claim. Very, very simple. So it is a reimbursement plan. Okay, we're getting near the end. Hang in there with me. Legal plan, Legal Shield. We've had Legal Shield for a while. It's a great program. And this, again, is kind of like joining a club. You're joining a group of other people through Legal Shield that are in a program where you're paying a monthly fee, a subscription, or a premium, and for that cost, you get certain benefits. Now, you might say, well, that's the way insurance works, right? Well, in a sense, yes, in a sense, no, because this is kind of like paying a retainer fee almost to have an attorney available for you, because you have an unlimited number of issues that you can get legal advice for. You can also get contracts, documents reviewed. You're going to go rent an apartment or you're going to buy a home and you just get no idea what you're reading. Well, they will do that for you up to 15 pages. And that's no additional cost. That's part of becoming part of the plan, becoming a member. Also have a simple will prepared, which is really important if you haven't done that. And consider perhaps a living will, a trust, that type of thing. So a lot of different benefits. You have access to traffic ticket assistance, IRS audit assistance, trial assistance. There's a lot of different benefits by being a member that you get access to and you get for your monthly fee. Beyond that, then you get a 25% discount off of that law firm's rate for additional benefits that are above and beyond. For example, you don't have a will. Well, it's a very good idea to have a will and a financial or healthcare power of attorney. But you also have minor children, and you want to, and maybe there's a past marriage or children from a past marriage, as an example. It's really, really important that you have some type of a trust set up so that money that you leave behind or things you leave behind, whether it's financial or whether it's the care of your children, and you need to name a guardian, it's very important to have a trust that basically spells that out and protects those children, depending upon who would inherit your money. So that would be something that would be above and beyond what's basically provided, the will, but you would get that at a discount. So great program. It's we've had it for a while. Legal Shield. It's very good. Call and get some more information about that. Once again, you can cover yourself or your spouse or domestic partner, children under 26, dependent children up to age 18, or if you have a child that's living at home under your care and can't live on their own, for example. So they also have family members that can be covered. Here are the rates. There is an ID shield or some identity theft protection that you can add on to this plan. It's not as significant as the Allstate plan, but it's a lot less expensive. And so just by being a Legal Shield member, you can add that on for a few dollars more. That's something you can look at as well. So if you want to find out more about this, again, call, schedule an appointment. You can go in and enroll in the plan and get your questions answered. It's a good plan. It's got lots of awards and it's been around for a long time. Okay, so just to review once again, as a reminder, these benefits are all available now during open enrollment. They take effect January of 2026, so they're for the 2026 plan year. These are all supplemental plans. They're voluntary, optional. You can enroll in all of them, whatever you choose. You've got all month to decide, look at the rates, schedule a time to go through any questions that you have, or just to make sure you're seeing the correct rates. You can use that QR code to schedule an appointment. You can call that 833 toll-free number, or you can go into the Work Terratile and My Apps, or simply go on to sfhss.org/voluntary benefits and check it out. If you have any questions whatsoever, call, schedule an appointment. We're here for you. I really appreciate your time and attention, and wish you the very, very best during this open enrollment to make sure that you're covered and you have everything that you need and want. And the San Francisco Health Service System appreciates you. They provide great benefits. These are supplemental things that might complement what you have for those of you that are interested. So thank you again for your attention. And we hope you have an absolutely great rest of the year.
Thank you. And now we're going to go into our Q&A session. I'm going to invite Rob to come back on camera and help me answer the great questions that our members have had. So the first one, Rob, can you hear me? Just want to make sure you are back.
Yes, I can.
Awesome. The first one we have is from Bob. What happens to voluntary benefit programs upon retirement? Can any enrollments be continued?
And the answer to that question is yes, they can be. Some of them, the MetLife products can, the Chubb Life can, the life and disability do terminate at retirement.
Okay, great. Thank you. And then Julie wants to know, is guaranteed issue a one-time option? If we don't sign up this year, is it likely we will be offered this option next year during open enrollment?
I think you answered that one, Jessica, relative to the life and disability, but the MetLife guarantee issue for those products is what they call evergreen. So it's always available through guarantee issue. And the Chubb lifetime benefit term is typically opened up for guarantee issue on an open enrollment basis, although we have to negotiate that each year.
Yes, and so for the supplemental life that's available through New York Life, what Rob was referring to is that guarantee issue is just for this open enrollment. In the future, you're allowed to enroll, but it will require an evidence of insurability, which may include a medical exam. And the next question is from AJ. I'm on the voluntary benefits website, however, cannot locate the premiums rates for those benefits. Where are the links? So he's basically looking for the benefits. And I did give him the link to myapps.sfgov.org, and you'll have to look on Workterra to go to the Workterra tile from the MyApps page in order to see some of the rates. But specifically, AJ wanted to know the rates for Pets Best, and I think you'll have to. How does that work, Rob? Do they go from Workterra to the Pets Best, because that also depends on your pet's age?
Yes, the Pets Best, they have a website and or telephone number. I think it was on the screen there. It should be listed in the website, where you call or you go in and you enter that information for your pet, the age, the breed, your zip code, and they calculate a benefit for you, or calculate a premium, sorry.
Great, thank you. And then the next question is from King.
Oh, sorry, Jessica, I'll drop the flyer also on this Q&A box here. It's very informative from Pets Best.
Okay, great. So for the Chubb lifetime benefit, we have to pay the premium after our retirement until we die if I want to continue the benefit. Is that correct? Or is there an age or years of enforcement of policy that we can stop paying the premium?
Yes, the Chubb lifetime benefit term, as I said in the Q&A, it's designed to be for your entire lifetime, and I believe they calculate the plan as being paid up at age 121. So that's why I put G's in there. That's the entire length of the plan. But after 10 years, you do begin to build up a certain amount of paid up coverage. So if you've had the plan for 10, 15, 20 years and you just don't want to pay for it anymore, you can contact them and you'll have, let's say you had $100,000 of coverage. You'll have a certain amount after that period of time, $10, $20, $30,000 that would be paid up and would require no more premiums.
Okay, great. And then we have another member who wanted to know, for the critical illness insurance health screening benefit, how do you submit proof of a claim? Is the payment of the benefit payment or $100? I'm not sure. Is CY current year?
Yes, it's $100 per year, and all you have to do is call their toll-free number, which I posted there. And you do not have to submit a claim or submit a form or proof of anything. You just call them, and they will send out the $100, and that's an annual benefit, and it's for yourself and any other members of your family that are covered.
Okay, and then we have another question from King. The MetLife accident insurance, is that on top of medical coverage?
Yes, so the accident and critical illness plans pay you directly, regardless of regardless of the medical plan that you have. So there's no coordination or offsets on those plans at all. They just pay you based on what the policy that you have says, whether it's a lump sum under the critical illness or if it's one of the scheduled benefits under the accident. So it pays you directly.
Okay, great. Oh, Rob, I just realized you're not on camera.
Oh, sorry.
Oh, that's okay. The next questions are from Michael. He wanted to get contact information to get a consultation for New York Life and for MetLife. So unfortunately, I think Workterra, we're all out of consultations. Is there a phone number? What is the best? Okay, I
So
see
there's
you
a-
put a number for MetLife,
Yes. I'm
but
not
if he
sure.
wanted to get a consultation regarding either of those benefits, is the Workterra line still available? Will people be answering that?
It should be, yes.
Okay, would you mind dropping that into the chat for Michael
Sure.
Toe?
If Lisa is still on, Lisa, could you drop that in?
Sure.
Great, thank you. And then Yuri has a question. For accident benefit covers when the accident happened overseas, for example, while traveling.
Yuri, that is a great question, and I'm trying to get a confirmation. I do not believe that that an accident you receive benefits overseas out of the country would be covered, but I'm trying to get a clarification on that.
Okay, and then we have a question from Fiona, confirming when enrolling in supplemental life insurance that the rate is for this year and then likely is increased next year. Also, that NYL plan is portable at retirement. So that's a two-part question. Will the rates increase year over year?
The rates do increase as you go into a different age bracket, and I believe those are 5 years, if I'm not mistaken, age bracket. So if you just turn a certain age, that rate would stay the same until, 4 years later, for example, when you go into another age bracket.
And then what about the portability after retirement?
So the supplemental term life is not portable at retirement.
Thank you. And then Paula wants to know, is the open enrollment tile on MyHub only shown if logged into the city network? Yes, so you will have to log in order to see the open enrollment tile. You can log in directly through MyHub, or if you're already logged in as a city employee through SF My Portal, you should be able to access it from there as well. And then Jess wants to know, can these benefits continue if we change jobs or leave CCSF?
Yes, and as I mentioned, the Chubb Life, certainly the legal plan, the pet insurance plan, the identity plan, those can all be continued on an individual basis, as well as the critical illness and accident insurance through MetLife. So really, the only plans that are not available if you leave the city and county or your work group would be the supplemental life and supplemental short-term disability.
Great. And Claudia wants to know if this webinar is recorded. So the webinar is recorded. We do have a previous one already available on our website, which I think Jay has shared that link online, but we'll be posting this webinar also probably by tomorrow. So you can go back to the calendar where you're able to register for this webinar in order to see the video will be posted there. And we only have 2 minutes left. I see we have another question come through from Claudia. I tried to schedule an appointment with Workterra. I received an RSVP, then I received a cancellation text. Workterra staff informed me that the system is allowing it, then canceling appointments. Can somebody put the phone number for Workterra down? So we apologize for that if there was some issues with so all of the appointments have booked up. So we do apologize for that inconvenience. Lisa, do you see
Posted the phone
Claudia?
number. Yeah.
Yeah, can we put a phone number for Workterra? Oh, okay. And we are only at the 1 minute time mark. So let me see how many questions we can answer. Bob, as a retiree, will you need to re-enroll each year, or do you then have independent relationship with your provider?
Bob, yeah, post-retirement, any benefits that you have taken with you, you would be dealing directly with that provider. And the
Okay,
que-
Cal,
the question on Legal Shield, we do understand that there is a limited amount of attorneys in their network, and that's something that we're reviewing.
thank you. And thank you for that question, Kelly. Just for everyone's awareness, Kelly feels that the lawyers are terrible that are part of Legal Shield. And so thank you for that feedback. I think we are at the end of our webinar. I want to thank everyone for attending today and thank you for your time. We'll be ending the webinar now, and I think we were able to get through everyone's questions. So thanks so much.
Thank you. Thank you all very much.
Thanks. Bye.